The American dream. It's a powerful phrase, isn't it? It conjures up visions of prosperity, stability, and a bright future. For many, it evokes images of a place to call your own, a place where families grow and memories are made. Owning a home is a cornerstone of this dream, but the path to homeownership can seem daunting, especially in today's market. High interest rates, rising property values. The financial landscape is challenging. These factors can make traditional mortgages feel out of reach for many hardworking individuals and families. The dream can feel distant. But here's the good news. There are other ways, creative ways, to unlock the door to homeownership. Innovative solutions are available. Creative financing opens doors for those who don't fit the mold of the typical mortgage applicant. It offers hope and possibilities. It's about finding flexibility and opportunity in a world that often seems bound by strict rules and financial barriers. It's about thinking outside the box. In this essay, we'll explore these alternative paths to homeownership, empowering you to make informed decisions and claim your piece of the American dream. Together, we'll navigate the journey to make this dream a reality. Let's face it, the traditional mortgage process can feel overwhelming. Banks have strict requirements, and qualifying for a loan can be challenging. This is where creative financing comes in. Creative financing is about finding alternative ways to finance a home purchase, often by looking beyond the conventional bank loan. It's about flexibility, adaptability, and finding solutions that work for both the buyer and the seller. Imagine this. You've found your dream home, but securing a traditional mortgage seems impossible. Creative financing options provide alternative routes, offering a chance to achieve your homeownership goals. Whether you're a first-time homebuyer, self-employed, or have a less-than-perfect credit history, understanding these options can open doors you never thought possible. Rent-to-own agreements, also known as lease purchase agreements, offer a unique path to homeownership, especially if you're not quite ready or able to secure a mortgage right away. Here's how it works. You rent a property with the option to buy it later at a predetermined price. A portion of your monthly rent payments may go towards a down payment, making homeownership more attainable over time. Imagine this. You're renting a beautiful house with a rent-to-own option. Each month, a portion of your rent payment goes towards building equity in the home. After a certain period, you have the option to purchase the home using the accumulated credit towards your down payment. Rent-to-own can be a fantastic opportunity for individuals who need time to improve their credit score, save for a down payment, or simply test out homeownership before fully committing. Seller financing, also known as owner financing, can be a win-win situation for both the buyer and the seller. In this scenario, the seller acts as the lender, providing a loan directly to the buyer. This benefits the buyer by potentially accessing more flexible loan terms and a less stringent approval process. It can be a lifeline for buyers who may not qualify for traditional mortgages. For the seller, it offers the opportunity to sell the property faster, potentially at a higher price, and receive regular monthly payments with interest. Consider this example. A couple wants to buy a house, but their credit history is less than perfect. They find a seller open to financing the purchase. The couple secures their dream home, and the seller benefits from a steady stream of income from the mortgage payments. Section 5. Lease options. Testing the waters of ownership. Lease options provide another flexible route to homeownership, offering a unique blend of renting and buying. With a lease option, you lease a property with the right, but not the obligation, to purchase it at a predetermined price within a specific time frame, usually ranging from 1 to 3 years. Think of it as a try-before-you-buy approach to homeownership, allowing you to test the waters before making a significant financial commitment. You get to experience living in the home and neighborhood before committing to a purchase, giving you a real sense of the community and lifestyle. This can be especially beneficial if you're uncertain about your future plans or want to assess the property's condition over time, ensuring it meets your expectations. For instance, imagine a young professional relocating to a new city for a job opportunity. They find a house with a lease option, providing them with a temporary yet stable living arrangement. This allows them to live in the house and neighborhood for a year before deciding whether to buy, giving them ample time to explore and adapt. They have the flexibility to make an informed decision without the immediate pressure of a purchase, ensuring they are truly ready for homeownership. Section 6. Weighing the pros and cons. Your financial freedom is key. As with any financial decision, it's crucial to carefully weigh the pros and cons of each creative financing option. Understanding the implications can help you make an informed choice. Rent-to-own pros: path to ownership for those with credit challenges, time to build equity, an opportunity to test drive the home, ensuring it meets your needs before committing fully. Cons: risk of losing the home and any accumulated credit if unable to secure a mortgage later, which can be a significant setback. Potentially higher purchase price than a traditional purchase, making it more expensive in the long run. Seller financing pros: flexible loan terms that can be tailored to your financial situation, potential for a quicker closing, less stringent credit requirements, and cons: higher interest rates than conventional mortgages, which can increase your monthly payments, risk of losing the home if payments are missed, potential for balloon payments that can be financially challenging. Lease options pros: flexibility to decide whether to buy later, giving you time to make a well-considered decision, opportunity to build equity through rent credits, which can be beneficial in the long term, time to assess the property and neighborhood, ensuring it fits your lifestyle. Cons: option fee required, potential loss of option fee if the purchase doesn't occur, which can be a financial loss. Rent payments may be higher than market rates, adding to your monthly expenses. Section 7. Navigating the landscape with confidence. While creative financing can be a fantastic way to achieve homeownership, it's essential to proceed with caution and seek professional guidance. Do your research, thoroughly understand the terms and conditions of any creative financing agreement. Seek legal advice. Consult with a real estate attorney to ensure the contract protects your interests. Get pre-approved. Even with creative financing, knowing your budget and potential loan options is crucial. Communicate clearly. Maintain open and honest communication with the seller or lender throughout the process. Inspect the property. Just like with a traditional purchase, a professional home inspection is vital. Section 8. Your dream home, your terms. Owning a home is more than just a financial transaction. It's an emotional investment. Creative financing options empower you to take control of your financial future and achieve the dream of homeownership on your terms. By understanding these options, carefully weighing the pros and cons, and seeking expert guidance, you can navigate the path to homeownership with confidence and create a legacy of financial security for yourself and your loved ones. Remember, the American dream is within your reach.